How things at your end?
Yeah, really good. Yeah, busy just in the lead up to Christmas, a lot of stuff on with the kids, the family, but yeah, all good.
Yeah, that's good. Let me just share the link across the groups. I've shared the link, so we should have people joining in a couple of seconds. We are still 2 minutes early.
Okay.
That should be good. If you want to share this or retweet so that more people can join, I've posted that on Twitter.
Oh, there we go. Yeah, I see it.
Just check on the YouTube. We have people in the chat. Mm. Hi guys, good evening and welcome tonight. Uh, we're going to have hi Jeremy. So I have Gavin with me tonight, and he's going to talk about uh, new option strategies. I got the feedback that people liked him very much when he was live last time, and they wanted me to bring him again. So he's here. So we're going to give him a couple of minutes so that more people can join in. And then I'll give the screen to Kevin and he can take it from there. And once he's done, we'll come back and finish our analysis. All right. Thank you very much. Kevin, I think you can take it from here and let me know if you need me. I'll be just watching and learning from you in between.
Okay, awesome. Well, yeah, thanks for having me on again. And yeah, hopefully we can find some interesting and profitable ideas for everyone. So the first one I'm going to share is on Amazon. So um, hopefully you can all see my screen okay here, but if we just buy the stock, we've got a linear relationship, right? Stock goes up, we make money, stock goes down, we lose money. And with options, we can adjust that so that we can have a favorable reward to risk ratio. And at the moment, options are very cheap. So we can buy really cheap protection in the form of a put option. That's originally how or why options were created. Got a bit of a bad name recently in terms of some of this high risk stuff that's going on. But originally, options were actually created to protect people's investments, like insurance. So you've got your insurance on your house, you pay that premium, you're happy to pay it, and you know that if your house burns down, you're going to get your house rebuilt and get your money back. And the same goes with put options. If we buy 100 shares of Amazon, think of that as our house. We don't want Amazon to go to zero. Yeah, that's probably pretty unlikely, same as your house burning down, but it could happen. There could be a flash crash or something like that. So we can go out to March, for example, and buy a put option, and now we've cut our risk. So now our maximum risk, instead of nearly 15,000, our maximum risk is only 1,000. Now, the downside of doing that, of course, is that now we need the stock to go up in order to reach our break-even price, because we've had to pay an extra $700 to buy that insurance. For those that don't know, what we're looking at here is what's called an option risk graph or payoff graph, payoff diagram. The blue line is the profit and loss at expiration, and the purple line is what we call a T plus 0 line. Basically just means trade date plus 0 days, or how does the trade look as of today? So those are what those are. Now, we're paying that $700 in insurance. What we can do is sell a call option against our 100 shares, and that's going to completely pay for that insurance that we've just bought. So now we've got a pretty funky looking risk graph, but we've capped our risk even more on the downside. Maximum risk is about $400 right at here at 145. But realistically, if Amazon has a big drop, our max risk is about $200 and our maximum returns up around $700. So a $700 return on a $200 investment, it's a pretty decent return, right? So I like the risk reward of that scenario. Buying a put option and then selling a call option in the next month for about the same or slightly more than what we're paying for the put option. And then we're basically getting very cheap, not quite free protection. So that's the first one. That's a strategy you can do on pretty much any stock as well.
So what do you call this strategy? Does it have a name?
Oh, I don't know that has a name actually. Well, we might have to come up with one.
Because like usually what we do is we buy put and we also buy call, that then we become strangle. But here you're buying the put and selling the call. This is new
Correct.
for me.
Yeah. So yeah, a little bit different. But something that if it's new, definitely recommend sort of paper trading first or back testing with something like Option Net Explorer would be a good idea. But if Amazon goes up, we're happy, we're making a really nice return. If it goes down, we're protected and we own the shares at a much lower cost basis. We can then just sell outright covered calls against it. Maybe if it's dropped down to 130, 125, we think that's a bit of a flaw for Amazon. We don't need to buy the put option the next time when we get around to March, and we can just keep the long stock and sell covered calls against it potentially. So hope you enjoy that one.
What if the stock goes to let's say 175, 180? Then in that case my gains are limited, right?
Correct. So that's the trade-off. Yeah, the gains are going to be limited. If you just had the stock and we went up to 175, we're looking at about 2.5 to 3,000 return. But in percentage terms, we're much better off. We can actually, if you've got the capital to do it, you can do this with more contracts as well because you've got that protection. So yeah, slightly lower upside potential and much, much lower downside risk.
So I have like a couple of people asking you questions on the chat. Let me read it to you.
Sure.
Jake is asking, would not be better to keep selling put until it gets assigned and then sell call?
Yeah, you can definitely do that. That's one of my favorite strategies called the wheel. So yeah, definitely love that strategy. Happy to do that on Amazon as well. So that would be, let's say you're happy to take ownership of Amazon. Maybe you sell the 145 put. You receive $700 for it. That's your payoff diagram there. You're still going to get the 750 on the upside. You have got the unlimited risks still on the downside. But again, market's pretty bullish. How likely is it that Amazon's going to be down here at 100? Probably fairly unlikely. So that's a really nice strategy as well. And then if it does happen to drop below 145, you get assigned, you take ownership, and you sell covered calls. So yeah, absolutely love that strategy as well.
Thank you.
Was there some other questions as well?
Like somebody was mentioning, can we call this a short straddle?
It's not really a short straddle. Yeah, I don't know. This part is I don't know, a covered call with protection, maybe something like that.
Yes. Can you do me a favor, Gavin? Can you just take a screenshot for this structure for Amazon so that I can keep that?
Yeah, sure. Let
And
me
it's
just.
easier for people to understand. Because once they see this with these combinations, it's easier to understand.
Yeah, definitely. So there we go. Okay. There we go. I'll put that out on Twitter as well.
In between, I'll put that on Twitter from your side.
Okay, cool. All right, should we move on to the next one?
Mm-hmm.
So Nvidia has been very bullish, and actually just going to bring up a stock chart here. Sorry, should have had this ready to go. In any case, it's just bounced off the 50-day moving average. So here we've got a bull call spread, slightly out of the money, where we're buying the 485 call and selling the 500 call. It's going to cost about, if I could just change it to one contract, keep the numbers easier. That's going to cost about 660 and a return potential of about 840 above a price of 500. So nice bullish trade, pretty simple on Nvidia based on it jumping or bouncing off that 50-day moving average. Here we go, I've got the chart, bring it over.
It's
So
a
you can see
small
there,
spread,
really
right?
nice support on that 50-day moving average, really bullish candle today. I think that's a good chance to rally back up and test that high up above 500.
Yes, and like I also use option flows. There was a 17 million in the money option flow came for Nvidia.
Oh wow, there you go. Yeah. So that's a good low risk way to play the stock with options rather than buying the stock. Attractive reward to risk ratio as well. Slightly higher profit than the risk profit potential.
Well, one question for you here. Why we went for March here? Because like we are choosing 485, 500. It's not too far. It's just like $10 away, and we are buying so much time on this.
Yeah, it just gives you a bit more time for the trade to work out. So it is going to suffer a little bit of time decay. You can't really see it here. But if you go shorter term, I mean, we can take a look at that.
Like
Let's
January,
say, sorry, go ahead.
I'm saying this if we pick up January 19th.
Yeah, well, let's go even shorter. Let's go December. Let's say we think it's going to get to 500 by the end of the year.
Mm-hmm.
Just change the expiration date. So that's going to cost a little bit less, about 460, 470, and a higher return potential. So yeah, that's a more aggressive way to do it. The downside here is we've got more time decay. But yeah, that's maybe the better way to do it.
Okay. And this is like a normal call spread. Call
Yeah,
bid.
just a normal call spread. Yeah, debit spread again because volatility is so low at the moment. It's better to be buying options than selling options.
Right.
So see if we can see that here on the chart for Nvidia. This is the volatility chart. So you can see in the last 12 months, it's ranged from 31 to 68%. You want to be selling options when the volatility is high, and you want to be buying options when it's low, and it's very, very low volatility at the moment. So it's better to be doing those debit spreads and things like that, any sort of option buying strategy rather than selling options.
Makes sense.
All right, should we go to the next one?
Mm-hmm.
Google. So this one's out to February. This is called a broken wing butterfly.
I love this.
Yeah, I'm loving these at the moment. I think this is a good way to play the market at the moment, where we've got a slight income potential on the upside. So we're risking about 450. If Google's above 135, we're going to make about 50. So what's that? 50 over 450 is about an 11% return. And then we've got this big, nice profit tent between about 125 and 135. So max profit potential is about 550. Have to get pretty lucky to finish right at 130 on Feb 16th, but it could potentially happen. And then if we change this T+0 line out, say, a month from now, kind of see how the trade will progress over time. So you can actually make a little bit more sometimes on the upside. And then when we get sort of within a week or so of expiration, you can see we're looking really good in this zone around here. So pretty wide profit margin between now and Feb, between sort of 125 and anything above 135 is fine. So if we look at the chart, we've got about 125 down here is the lower part of our broken wing butterfly, and 135 is up here. So anywhere in this zone in February is good, and anything above is fine as well.
So, Gavin, one question, like usually when I play with all these complex option strategies, sometimes I tend to open the legs of these strategies. Like I'll buy the middle one, or I'll buy the credit spread, which is like 130, 135, and let the individual one run. Do you do that? And like in case things do not work around as you expected, what will be your exit criteria or exit strategy?
Yeah, for sure. In terms of entry, I'd probably just do it as the one trade. I wouldn't leg into it, but you can definitely do that. I'd probably have a stop loss at 125. Sometimes what I'll do is I'll take off the initial butterfly and roll it down. If it does hit 125, that's really the only number I have to watch on the downside. I'm not worried if the stock rallies. I just take the small 10, 11% return. And as long as we're above 130, I know the trade's absolutely fine. So with this one, I'd set a price alert at 125. And if that level gets broken, I'd close out, or I'd adjust by rolling down and potentially sort of scaling into the position then. And if we just change back to T+0, even if Google hits 125 tomorrow, we're only down about $120. So really not too bad. And if that happens later on in the trade, sometime in January, probably able to get out of the trade for a scratch, no loss sort of scenario.
Okay. Let me see if we have another question. Satya is asking, is this the risk reversal strategy?
This one's called a broken wing butterfly. Yep.
Okay, and a general question, like actually Nvidia has been stagnant while all the other semi stocks have rallied 10 to 15%. I can answer this, Raj, because AMD was a laggard. Nobody was expecting AMD to come up with a chip that could actually compete with NVIDIA's, and the market of AI chips is enormous. So the day Lisa Su came on the CNBC and Bloomberg and mentioned that yes, the potential of increasing the revenue by 2 billion is very conservative. They could actually do a double of that. That actually pushed AMD and AVGO into the new horizons. Nothing else. I'll give it to Kevin now. He can give his view on that.
Yeah, I think you've summed that up pretty well. So nothing more really to add there. Yeah, the Nvidia strategy was a bull call spread. If someone was asking about that. Two more. This one, just a simple cash secured put. So this is a really boring trade, right? So this is not going to appeal to too many people, but I like to do this sort of thing. XLU is just, such a defensive name, pays a good dividend. So I'm going to sell that 2-week put option down at 63, just below where the stock's trading. If that gets assigned, I'm going to scale in. I'm going to keep selling puts below, collecting the dividend, selling covered calls, and basically sell more puts if it drops, sell calls if it rallies, and just keep building a position. So that's generating about $75 in 2 weeks. And then there's going to be times where I own the stock and I'm going to sell a put and a call. So potentially generating sort of 130 in a 2-week period if I'm selling a put and a call. So let's average that out at say $100 every 2 weeks. That works out about $2,500 a year in option premium. So that's pretty attractive, I think, on a stock that, that doesn't include the dividend as well. If I'm stuck holding the shares for a while, I'm collecting that 3.3% dividend as well. So I have a little calculator that I use when looking at these scenarios. Some of you may have this. If you don't, just reach out. I can give you a copy. Basically, just fill in these cells in green, and the calculator will do the rest. So we've got 17 days to expiry. There's the stock price. That's our strike price that we're selling. It's actually now at about 75 cents. So that's going to generate an annualized return of about 25, nearly 26%. So that's pretty good for a boring trade on a pretty boring ETF, right? And like I said, that return could be even higher once we start selling puts and calls at the same time, and we're getting double the amount of premium here. This might be more like 140 or 150, and we're getting a much higher return once we're selling a put and a call at the same time. So, like I said, it might not look like much, generating $75 in 2 weeks, but this sort of thing can add up over time. As you can see, that's potentially about $2,500 a year just in option premium, and then plus a little bit more in the dividend income as well.
Okay. So, couple of questions for you. One is from Ganesh. Which delta value is good for options, and why to pick up in the money options or out of the money options? When to pick?
It depends on the strategy. If you're selling put options, you want to just be slightly out of the money. This one here's a 46 delta. Anywhere from there down to a 35, even a 25 delta is okay. If you don't want to take assignment of the stock, or you'd prefer not to take assignment, you'd probably go down to like a 15 delta. But with a stock like XLU, a 15 delta, you're not going to get much premium at all. You'd have to be doing that on some of the more high volatility stocks. And then if you're doing sort of in the money, buying a call option, somewhere around the 70 delta is good. So you could do a strategy like a poor man's covered call, where you buy the 70 delta in the money long-term call option, and then you sell monthly call options against that position. So it does really depend on the strategy.
Okay. Gavin, on Zoom, I'm looking at XLU screen, and on YouTube, I'm looking at Google screen. Which one is live?
XLU is live.
Okay, thank you.
So question on I'm just looking at the YouTube comments as well. The broken wing butterfly. If we change the strikes around, I think that's going to be, that wouldn't work.
Yes, because usually
Okay.
we want to, this is like credit coming to us. So
Yeah.
if it is half, usually I take it as half. If it is half, then the risk reward is much better.
Yeah. So someone else, what's the criteria for XLU over SPY? It's just a more defensive name, but yeah, you can absolutely do it on SPY as well if you've got the capital to do that. SPY is going to take about $46,000 or something to take ownership of 100 shares, and then double that if you're going to do 200 shares. So that's not going to be available for everybody. But yeah, you can absolutely do it on SPY if you've got the capital to do that. Go for it. And then the last one I wanted to share is a VIX trade. Like I said, VIX is really low at the moment, lowest we've seen in 12 months. So looking at just doing a butterfly centered at 20. So we buy the 15 call, we sell the 20 call, we buy the 25 call, and we're creating this profit tent for very low cost, where it's only costing us about $50, and we've got a return potential of 450 as a max. So really nice reward to risk ratio, on the assumption that volatility is pretty low at the moment, but we think maybe by around mid-Feb we might get a bit of a spike at some point between 15 up to 20, but no higher than 25. So I think that one could do quite well also, and can be a bit of a hedge for a portfolio of stocks as well. Typically, if we're going to see the VIX go up to 20, that means stocks are going to be dropping. So this hedge trade will make a little bit of money to compensate for the loss in the stock portfolio.
Yes, I think VIX is may remain low until early January, and then, as you said, it's going to spike. This volatility is about to come back. We are just moving in one direction market, and the downside is very limited now on the VIX.
Yes, correct. I 100% agree with that. Yeah.
Okay. Guys, any questions on this? So Ashish has one question, uh, not with VIX, but with respect to SOXL. SOXL is 3 times bull for semis. Is the ETF better play than picking Nvidia or AMD, or by going in the money or selling puts?
Personally, I tend to avoid anything that's leveraged, any of those leveraged things. Yeah. So yeah, I don't want to really get into those sort of things.
So usually I also avoid these leveraged ETFs. I prefer picking up the stock individually, and I don't like selling puts. There's one bad news, and then your account is gone. I
Yeah.
I don't like selling puts. I may do spreads, but selling puts without stocks is a little risky. Any reason why we expect VIX? Because VIX is at almost 2 3 year lows at this time.
Yeah. Yeah.
So when you compress something that low, it will bounce. So historically it does. So we expect some move coming up, maybe some negative news, maybe something bad as a catalyst. Maybe tomorrow's meeting from Fed will say we are expecting higher rates until the end of 2024. Now everyone is
Yeah.
expecting May to have some cuts. I don't see that happening, but if Jerome Powell says so, it's going to happen until then, and that can bring the VIX back into the game.
Yeah, exactly. I agree. Well said.
Anything you have for I'll take you give you one example, Gavin. Usually in India, what I do is I buy the futures and I sell the options,
Okay.
so I can hedge my position, right? Like for example, I have India Nifty, like index is Nifty, so I buy Nifty futures and I buy equal amount of call options so as to hedge, because the premium in the call option is enormous. So what do we do in the scenarios where options are expiring every single day on SPX? If I buy 2 lots of ES futures and I short one uh, SPX option, does it make sense?
So you're buying the futures and selling the call options. Is that what you're saying?
Yes.
Yeah, I guess it's similar to a covered call strategy. So yeah, I don't see any issue with that. I guess yeah, just if it's SPX, there's no assignment risk because it's cash settled. So yeah, you don't have to worry if they go in the money. Um, yeah, I think that's not a bad strategy.
Okay, I've not tried, because usually in India we have stock futures. Like here in America, we only have index futures. In India, we have stock futures. So I buy stock futures and sell their options. This way I'm hedged in, like, very nicely.
Yeah,
But
nice.
here we don't have stock futures at all.
Yeah, that's a shame, isn't it?
Yes. So anything more on your agenda you want to cover today, Kevin?
No, that was it. Unless there's any other questions, but yeah, if anyone has questions after, you can feel free to reach out to me as well.
Mm-hmm.
But yeah, otherwise, thanks for having me on, and I hope you enjoyed the ideas today.
Yep, absolutely. Awesome idea. Especially for me, I like the VIX one because I think we are onto something where we can actually going to get something out of VIX. Quick spike 10-20% is just down the line. The
Yeah.
butterfly is really, really. I will not buy that much time. I will only limit myself until January because I'm like a short-term option trader. So, and I don't have that much patience, just to be honest.
Yeah. Fair enough.
All right. So thank you for joining us tonight and sharing your awesome ideas and trades. And anybody who has any question on the YouTube chat, please feel free to reach out to Gavin. I have tagged him on the Twitter. You can follow him. He's a great strategist, and you can learn from him and follow his trades.
Awesome. Well, yeah, thanks for having me on, and yeah, let's talk again soon.
Sure, keep on coming, and then we'll talk about new ideas. Thank you for coming
Awesome.
tonight.
Awesome. See you later.
See you. Bye bye. Hi guys. Back again. Like market. Let me just share my screen. Raj, what is your strategy to remedy which has sudden loss? Raj, if there is a loss due to news, there's nothing we can do. Uh, I convert them into butterflies depending on what is left in the option. If there's a news, then there will be nothing left in the option by the time I'm going to make the butterfly. All right, so let's look at like tomorrow again. There's FOMC meeting talking about like today. Let's start from today. I'll go back to my profile and we'll go back to the points we mentioned. So we expected CPI to be 3.1, 466.8 to hold and high. It should be in the range until FOMC. It remained in the range 46.90.95, and in the after hours it is showing a little bit of above 4700, but this volume is ridiculous. This volume is like usually this volume is in the first half an hour of the day. So I'm gonna ignore this. I'm gonna wait until the morning. But uh, all the tickers, especially the big size tickers, they started to come back. Like Apple made a comeback. It was 191 yesterday, 192. So it made almost 194.75, closed at the day high, which is a good sense. Amazon, I closed it and it rallied. It was supposed to happen and it did because I am an idiot. Every moment I close Amazon and it rallies. AMD was enormous. AMD was hitting 138 area and then rallied. Broadcom, I have no words. Friday, we entered into a 920 call at 13, and that call was 170 today. That is life-changing trade. Uh, then CRM is running high. So let me just do one thing. Let me just quickly go through the scans, see what is set up, what is not, and then we'll take it from there. And thank you for joining, guys. Hopefully you're learning uh, from Gavin and more. I'm inclined to bring some more people so that we can have more learnings for all of you. And if we learn more, we can share more. All right, so let's start from the scan. I'll be a little quick because we already used half an hour. So I'm gonna start from inside days. For VIX, I'll be looking at 15. I'll come to VIX, Ajay. Netflix is inside day. Guys, 1 second. I need to take one call. 1 second. Okay. Netflix is inside day. Snow is inside day. Let's go to our sheet. Snow is inside day. It is also inside week. I'm not removing inside weeks one. Netflix is inside day. Snow is inside day. Yep, Raj, I'll start to do that. I had 40 lots of Amazon. I closed and then it worked. I will do at least 5 next time. Uh, Lulu is at all-time high, so I'm not touching it. Leaving UNH. So let's look at any double inside days if we have. Square SMCI has double inside days. So we can look at, I'm gonna remove Humana, I'm gonna bring Square. The Square has double inside days. So inside days. Let's look at 12 crossing 34. Nothing on 30 minutes. Let's check it out on. Thank you, Raj. This is a good advice. Chadava is necessary. Marvel and Octa. Octa is, wow, it recovered 76. Wow. Then let's look at 12 crossing 34 on S&P. I don't trade them. Any bullish candle, bearish candle patterns on daily? No. Any bullish candle patterns on daily? No. Let's look at all stocks. These are yup stocks. Anyway, so we have the list now. I also added Roblox instead of Roku. So let's start first on ES. So ES crossed that. You can see it crossed that line. The negative index strength is like too low. 8. So there's hardly any negativity in the market. Now, tomorrow, if we fail here, that could be one uh, uh, factor which can bring us down. That depends on Jerome Powell. I still see he's going to talk and mention that yes, the employment is good, GDP growth is good, consumer spending is good, the unemployment is low. Why would I cut the rates? I may increase the rates because the impact is not currently felt by the economy. So I'm really doubtful that yes, we may see the cuts or the mentioning about the cuts in this meeting. He will mention that yes, he is happy inflation is coming down, but he is still far away from his 2% inflation goal, and market may not like it. So that's my take. I am not positive on Jerome Powell tomorrow. Based on two factors, like if you see, I have not seen something like this, the level of ES in last, let's go back to 5 years. In last 5 years, the level of this is enormous. I have not seen this in the last 5, 6 years. So it's a little risky for me, and the way we went up vertically in one direction, I'm a little hesitant. So the moment we lose 46.90, that was my precursor. So 46.90 below, I'll be looking to sell. Okay, so let's look at Aikinishi. So daily is 3. Uh, Aikinishi is 3 on this one. 1234 is positive. It's 1, 2, 3, 4. So it's 4 points on DMI state. Now buy near from 46.68. Now I'm going to talk about H24 because that was the confusion on that day. Now that is everyone has rolled on to the latest futures. So let's use that. So I want to buy with a stop loss of 46.90. If I lose 46.90, things will be bad. And sell below 46.90. We are not inside day. We are potentially may have a dodgy in the top and then follow up next day. Because whatever is, so the potential evening star is right there. I'm going to mention potential evening star into FOMC, which is negative for me. Now, possible areas to buy 46.95. The moment we are above this blue line, I'm okay. Following the half size of this candle, so I'm cutting down into half. 46.90, 95 is a good stop loss. Now, if we break this, next area for me is 47.79. And in the 5-year window, once we cross this, we have 47.40, which is right here. This is like 3 times, 1, 2, 3, 3 times it tested and then went down. This is the fourth time it is coming. So let's see if it holds or if it clears. Ajay, there's nothing on the workspace. I have to create these charts every single time. So you have to create the same charts at your end. 47.41. Second target is 4779. Now, I want to add probability here. I think it's not, I will say 40-60 bias is there. I will say 40-60 bias. Let me add that column here. Oh, 40%. Okay, it added this one. I'll add probability right here then. 40-60. I'm a little negatively biased for tomorrow. My take is like 40% we can uh, test above and hold. Otherwise, I think we are going down. Then on the short targets, once we lose this, we have gap to fill, and we have 4668, 4615. Gap to fill after future rollover. This is again a negative comment. 4668, 4615. So that's my view that yes, we'll have some level of negativity going in. Right now, there's nothing as such. This is high, HS rate is good, but these are negative. NQ futures, same thing. NQ is a little more risky. Same, like we are struggling at right at the top. Either we break this with some strength, 600, then we should have 800, which is like previous all-time high, 767. So 767, 825 will be real targets. It may happen, it may not happen. We are extremely stretched, almost like 2,500 point rally in one direction, which is a massive. From a Heikeneishi point of view, this is all 1, 2, 3, 4, 5, 6. Green market watch NQ is 3. So you can see that everything is showing positive 3, 3, but I'm inclined 40-60 for now because I think we are stretched. I'm gonna copy the same comments here. Now we are around 16,600 on the charts. So we need to break above 16,650 if we have to make any meaningful move here. We need to clear this red line. This was inverted head and shoulders, but a flat one. But we need to clear this. So 650 by above 16,650. Stop loss 16,620. Target 16,767. All-time highs 16,824. These are potential targets. And again, I'm going to mention this is potential morning star, potential evening star is there. That's why I've chosen yes. If we go below this area, 16,520 something. I'll just get 16,550. Stop loss 16,600. If we do that, we're gonna hit the gap. Let's say the low of here is 16,400. And this will be a healthy correction. I'm 16,181. I'll be a buyer at these places. I will not be a seller at these places at all. So this is about indexes. Now let's go to the triple Q. Same thing. It's struggling with the long-term uh, regression line. And this regression line may be something strong this time. Because we have 400 around the corner, 480, 68. Once we clear that, then we are on to 404. 402, 403 will be a good resistance. So QQQ is at all-time, almost near all-time highs. So if we close at 398.67, so I really want to buy 465, 403. This is my target. Again, I'm gonna give it 40% on the upside. Working with Excel is a pain. Stop loss is 398. Buy near 399. Now here, the back gap is still to be tested. Buy at the dips. Yep, this is done. Failure of 398 will lead towards 384. That's my take. That's why I'm like 40% positive on this. Apple. Apple is testing this 12 EMA, holding this 12 EMA to the point. Uh, it was about to make a dodgy and then it retained. So it's kind of a bullish engulfing. So Apple is bullish engulfing, getting ready to break 200, buy near 195.50. It's holding 193. So holding this support 194.50. I'll just change this to 194.50. This is good. High Kinishiba is on Apple. 0. So it has lost High Kinishi. DMI is still strong. Stop loss is 193.30. Target 198. 198 is a target, which was the previous high right there. And then 200. That's the psychological number. AMD. AMD was my green and it hit 138.80. Reclaimed the long weighted trend line, which it has, like it was inverted head and shoulders right there. And it broke out. It did the length right there. So I'm actually done with AMD. I think AMD should cool off here or should consolidate. So I'll be looking to buy this if it comes closer towards 135. So AMD was my prime play. I made that Affirm, let me just delete this row. I don't want Affirm for now. AMD, just no color. It's 2 and AMD is 4. See, once the stock starts to show 30 minutes Heikeneishi as 0, 15 minutes Heikeneishi as 0, it starts to tell me that yes, it is about to cool off. So Apple has cool off. Now I really want, see, the 12 and 34 EMA on this chart is like we are far, far away. Now it needs to cool off. So I'm taking a sell on AMD, a risky trade, because it has cooled off, it has done all the job. So I want to short AMD or short on rise 138. I should do short on rise or buy on dip. I really want to buy on dip. So let's do a buy on dip, not short on rise. Buy on dip 136. Stop loss 134.80, 138.80, which it hit, went on to this area and then 149.50. And once these companies start to push, they will push. So once they are ready, it's a breakout, 52 week. It looks good, solid, and I think it's getting ready. Amazon, I think I've been holding Amazon since Friday. It's consolidating so much. Like, so, I don't know. It's getting ready, but I don't have a position. So most likely it should run tomorrow. I'm going to keep this in green. I expect 150, 155. Boeing did 251 today. Now it's dodgy at the top, which is a sense of cool off. This is my perfect evening star setup. The moment we lose 248, let's go short. So in between, let's look at Amazon. Amazon has 0. Amazon is 0. Uh, this is 5. So Amazon is this. For Boeing, this is 1 to 4. 12 EMA is good. Market watch is 3. Boeing is 3, but it starts to cool off. It's a potential evening star. So if again short below 248, if market starts to give up, this could be a really good setup. They need to back test this 38.2. So 245.65, which is the half of this candle. Again, I do not expect enormous downside, but a back test. Stop loss will be where it closed, 249. Let's give it some window. So 249 will be the selling area. Potential evening star. Possible back test of 38.2 fib, which is previous 52-week high. This is good. Salesforce CRM broke out today and broke out above this zone where it went into the earnings day. It went almost to 263. Now it back tested this one and then bouncing hard. It is still away from its previous highs. Uh, 263 was, or 263.67. If you see right here, if I extend this, we almost came and tested the exact same point, 263.67. This is still 161.8 for so many uh, Fibonacci. I think if we hold 255, CRM can do well. So CRM is all five, CRM is one on high condition. I'm just mentioning all this information because it gives a clarity that yes, a stock is holding well. Should we short it? Should we not? So right now it is holding well. So now here we need to buy above on the chart 255. It closed at 256, but if we can buy around this stop loss 250, 290, target is 263, 263, and 266. And this could be a big mover into the year end sales moves. Like Crowd, Pan W, D Dog, they all are moving. Let's go to D Dog. And guys, if you have any questions, please let me know. I know it's late. I wanted to do a little quickly, but we were struggling around this area, 114,656. We are holding above the Fibonacci area, which is good. So let's take a positive take on this. It's 4, which is good. On the T-Dog, still 0 on T-Dog. From -1, it becomes 0, so it is better. So I want to buy above 115 this time. And my target will be 117.50. 125. So if I'm positive on reclaimed, if I'm positive on Salesforce, I'm gonna be positive on D-Dog as well. It is consolidating well. It is in the inside week like Salesforce. So probable move is coming. Alphabet or Google. So Google. It's below 12 and 34 right now. It's holding this. Strength is like kind of flattish, not negative. And Haikinishi as well is -2. So this tells me that yes, it's not showing strength. But if you see in longer term, it's actually getting ready for inverted head and shoulders. I'm gonna keep a very small stop loss on the long side for Google, just to make sure if we can cross 133.30, Buy above 133.30. Stop loss 132.50, which is close. Target is 134, 135. 134, 25, 134. It has lost possible inverted head and shoulders. These are all green comments. Keycom will discuss, Gurpreet. Hi, Mr. Bajwa. Meta was breakout, massive bullish candle. Once it clears 335, the game is on. Meta, let's look at the chart. This one, 0. By above 335. Where I missed. Welcome to Square. Let's do this one. Stop loss will be the green line tomorrow, which will be 333.50. 339.343. For Meta, I think things are, Chandra, it's totally your choice. I do not recommend buying options. I do options only. Square is an inside day. 69.40 is holding. It's a double inside day. I think it's getting ready. Square is getting ready. It's a double inside day. Now let's go back. Check for Square. It is 0. Square is 0. On the chart, it is positive and really nice. Now it's double inside day. 16.40 is my stop loss, which is 16.940. I want to buy above 70 or 25. Looking at 73.50, 77.60. So Square is also ready. It's an inside day, double inside day. Then we have Microsoft. Microsoft reclaimed 374, 375-ish area nicely. Reclaimed the 12 EMA. Now this will become the stop loss. 273 should be the stop loss now. 272.80 stop loss. As I said, it's getting ready. There's no resistance for Microsoft. Tomorrow, Amazon, Microsoft, if index has to hold, this will be an option. Microsoft, it's showing positive strength. It reclaimed 12 EMA. Everything is good. Chandra, you need to be a part of my Telegram community. I cannot answer this right now. I've answered this million trillion times. So if you can join, it's a free community. You can come, you can join and ask these basic questions. One. The link for my Telegram community are on Twitter. Netflix. Netflix is two. Netflix rallied and then gave up. I don't know why. Like yesterday, it went to 470 and then came back. It's an inside day, holding the 12 EMA, having a roughly in hammer. It was a morning star potential and it's still working out. I think if it holds this area of 460, Netflix has really good potential. Stop loss is 460 by near 469, 463. So Morningstar potential is gone now. Hammer is here. So let's see if Netflix perform. 460 is a very tight stop loss. Nvidia finally moved out of the range. A bullish engulfing candle uh, took over 12 and 34 EMA both with strength. Now Nvidia has 0, but it has like 4 half an hour and 9 15-minute high Kenichi back to back, which shows strength is happening. It is still 0 at this moment, with strength is happening. Stop loss at 473 now, and buy above 477, 482, 489.90. It's possible on Nvidia from my point of view. 489.90, yes. Roblox. Roblox, I've been trying for a couple of days. I think Roblox is ready. It's a massive bullish engulfing. It has overtaken this supply zone uh, relentlessly. I'm looking at 44.75, 43, 44.75. So Roblox is like looking really good. 43.25, 43.75. And buy above 42, stop loss 41. That's Roblox. It's taken everything now. Then we have Snow. Snow has been holding like 193-ish area. It's holding and consolidating inside day. 193 for more less than 194 and above. Let's go long. It's an inside day. Uh, Stop loss I will keep 191. Two hundred 200 is psychological level, and then 217. It's a massive snowflake rally which can come. Last one is Tesla. Tesla, I don't know what to do with Tesla. Tesla is losing its momentum. Everything is now bad. It's closing around this area below 236. So I'm gonna short this. Let's look at the high Kenichi. What is with Tesla? It's -1. So I'm taking a risk. I'm short below 235. Stop loss 236.75. I expect it to come to 230, 225.76. 230. 225. That's Tesla for me. Chanda, you need to go to my profile under highlights. You will see the link for Telegram. So thank you guys. I think it's late already today. Uh, I'll be sharing this sheet onto Twitter and into the Telegram community. Please, probability. I'm just adding probability to the individual. Let me add to all of them so that it remains consistent. All right. Thank you for joining tonight. I'll be sharing this, and if you have any questions, do let me know. I'll see you tomorrow. Bye bye. Take care.